All right, let's dive into one of the most incredible stories from the financial world. Seriously, it's a true David versus Goliath tale set right in the heart of the gold market. This is the story of how Wall Street's most brilliant algorithms went head to head with the collective wisdom of millions of Chinese grandmothers, and, well, you'll see who came out on top. And you have to understand, this isn't just a story about money. Not at all. It's a fundamental clash of cultures, of strategies, and of two totally different ideas about what wealth even is. So to really get this, we've got to rewind the clock to 2013. At that moment, the financial world was absolutely convinced they had found the perfect can't-miss trade. The setup looked flawless. I mean, the masters of the universe were all in agreement. The US economy was finally starting to heal after the 2008 crisis. The Fed was talking about slowing down its money printing. And according to every Western textbook, that meant gold's epic, decade-long run was over. So they decided to short it, betting billions that the price was about to fall. It honestly seemed like a total slam dunk. And on April 12th and 15th, boom, the market did exactly what they predicted. Gold suffered its most violent price crash in 30 years. For the hedge funds and banks who had bet against it, this was it. This was the moment they'd been waiting for. But just as the champagne corks were starting to pop on Wall Street, a totally unexpected force entered the market. It was something no algorithm, no computer model could have ever predicted, and it was about to change the entire game. Now, let's be really clear about who we're talking about here. Dama might sound like a funny, quaint term, but it represents a massive, and I mean massive, economic force. These are women whose entire worldview was shaped by the scarcity and chaos of 20th century China. They had this deep, deep skepticism of paper assets and an unshakable belief in physical, tangible security. So while Wall Street saw a technical breakdown on a chart, the Dama saw something completely different, a massive discount sale. And in just 10 days, they swarmed jewelry stores and banks, buying up a staggering amount of physical gold. Just let that sink in for a second. 10% of the entire world's yearly gold production. They basically vacuumed up a huge chunk of the global supply. This wasn't just a few people buying a necklace. This was a coordinated swarm of millions of household treasurers, all acting at once. All told, this buying frenzy added up to a massive $14 billion bet against Wall Street's smartest minds. And it worked. They created a floor under the price and stopped the crash dead in its tracks. By the way, if you're enjoying this explainer, do me a quick favor and hit that like button, share it, and subscribe. That way you won't miss what's coming up next. Okay, so what happened here wasn't just a trade. It was way bigger than that. It was a fundamental clash between two completely different worldviews on what gold, and really what wealth itself, actually is. And this really gets to the heart of the whole conflict. For Wall Street, gold was just a ticker symbol on a screen, right? An abstract paper asset you trade for a quick profit. But for the Dama, it was tangible, physical survival insurance. It was something you hold for the next generation, not just for the next quarter. Now, the Dana Mama may have won that first battle by stopping the crash, but for a long, long time, it really looked like Wall Street was going to win the war. Because after that, gold entered a punishing, multi-year bear market. For nearly 6 years, the Dama were a global punchline in the financial press. They were mocked for catching a falling knife. Analysts were constantly on TV calculating their massive paper losses. It was held up as this cautionary tale of what happens when so-called dumb money tries to play the game. But here's the absolute key to understanding their philosophy. They weren't traders with stop-loss orders on their screens. They bought the gold to hold it, as a dowry for a daughter, as a real hedge against whatever came next. They simply tucked the bars and bracelets away in a safe and waited. And you know what? That patience would eventually lead to the ultimate massive vindication, which really started to unfold around 2020. Suddenly, a perfect storm of global events started to prove the Dama's intuition was spot on. All of a sudden, those risk-free paper assets didn't seem so risk-free anymore. And guess what? Even central banks, especially in the East, started doing exactly what the Dama had done years before, buying up physical gold and taking it home. The price didn't just recover, it absolutely exploded. That ridiculed investment they made back in 2013, it turned into a monumental windfall as prices smashed right through $2,600, then $4,000, and even touched $5,000 an ounce. So you see, this story is so much more than just a great trade. It permanently reshaped the entire global gold market, and it offers a critical lesson for every single investor today. The direct legacy of that 2013 ambush is what's now called the Shanghai Premium. Their huge physical buying binge started a trend that their own central bank later put on steroids. It created this gravitational pull that basically broke the West's old pricing power. It acts like a giant vacuum, sucking physical gold right out of the vaults in London and New York and shipping it east. Of course, this gold rush had a dark side. As prices went vertical, the greed for even higher returns led some investors down a very dangerous path into these unregulated shadow platforms. The collapse of outfits like JRW, which promised crazy high yields on stored gold they never actually had, was a tragedy. It was this harsh, brutal lesson that hammered home the core of the Dhamma's original philosophy. Physical possession is everything. So in the end, the Dhamma went from being a global financial punchline, the dumb money, to becoming the very force that dictates global prices. They became this solid retail floor that now supports the entire market. Ultimately, they proved that a long-term view and a rock-solid belief in real, tangible assets could actually triumph over the most powerful financial institutions on Earth. And that leaves all of us with a pretty fascinating question. Which market will their immense influence reshape next?